How's it going, guys? Just want to start recording. What a lovely week it was. Record, record, record. There we go.
Nice. Recording in progress.
Perfect. All right. How's it going, guys? This is Forensic Forex with Deontay. It is Forex Fridays. I didn't do one last Friday. I wanted to take some rest off. But we're back every Friday, 8 p.m. New York Eastern Standard Time. And we're not going to waste any time because I have somewhere to be in a couple hours. So right away, off the bat, we're coming to the end of the month with AU. As we can see, this is the progress we've made with the month. We currently was consolidating. Very seek and destroy. Price takes a high, then runs back to a low, takes a low, runs to a high. It happens. And I'm glad to have showed this to the channel because as a trader, you're going to face months like this. And it's good that you are exposed to a month like this because many people aren't expecting a month to be sideways. And as you can see, AU was sideways. And that's okay. Were there trade setups available to you? Definitely, there was trade setups available. Are there always going to be large dynamic days or days where you grab 100, 200 pips? There may be, or they may not be. But you can see there are a few large days in here. And we'll walk through this subtly, but I want to jump right into the weekly range first. We're going to talk about the weekly range. We'll talk about midnight opening price. We're going to talk about IPTA. We're going to talk about leverage, margin, risk management. We're going to also talk about the New York model, essentially. And we're going to talk about the Asian session model. But I think a lot of people recently have seen that the Asian model was very successful, or is very feasible to follow at least. And they're liking it, or people are giving me good feedback about it, and they want to see something else because they may live somewhere else globally where the Asian session model doesn't work for them because they have to miss sleep. And I personally don't like to miss sleep. Health is way more important than money. I want people to know that before we get into this. Health is way more important than any dollar bill that you can get. Your health is way more important. So jumping right into the weekly range, we're going to start off with AU. And I have a lot of diagrams or annotations on the chart just to make it simple and clear for you guys. And I will check the chat periodically if you guys have any questions. So when I take a break, I'm just going to check the chat. Now, weekly open. Now, somebody asked me before, oh, what's so important about the weekly open? I do this every single time. Now, why do I do this every single time? Because the weekly open is your natural indication to overbought and oversold. It is the opening of the week right here on Sunday. Now, somebody in the channel had said to me that they're not able to see Sunday's data or on TradingView. Here, I'm showing you Sunday's data. You can see here, that's Sunday right here. 17 all the way up to midnight right here. You can see that. That's Sunday's data. Even if I go on the lower time frames, you can also see and calculate, or if you want to trade Sunday. But this is just to clarify, because some people say, oh, I can't see Sunday on TradingView. If you look at my cruiser down here, you can see it says Sunday. That's all Sunday there. And what am I using as well? I'm using Oanda. So many people ask, oh, which currency or which broker are you using? I'm using Oanda. Their liquidity pool tends to be the most accurate one. I'm not using FX CM, I think it is. It's garbage, honestly. But back to the weekly range. The weekly opening price will tell you where your overbought and oversold conditions is. Now, just looking at the week in itself, before we break down each day, we can already tell, given its hindsight, the week is already passed, we can see the commercials sold above the weekly open. That is very important. Now, why did they sell above the weekly open? Because it's overbought. It's expensive. It's a premium. We can see the high of the day, the high of the week, comes in by Monday. Now, it's actually Tuesday, but I'm not going to try and break it down because the daily candle starts at 5 p.m. So technically, Tuesday makes the high of the week. But here, when you break it down on the 1 hour, it looks like Monday makes the high of the week. Monday makes the high of the week. Friday makes the low of the week. You can see I have an annotation of a weekly bar. So instead of a candlestick, I did it as a weekly bar. So if I change these into bars, you see that's what it looks like. It's the same thing, open to close. It's no different. You can still read the price action the same. But I know most people are used to looking at candlesticks. But looking at it from the bar, I feel like it gives a well representation of what the weekly candle did or the weekly range did. This is the opening price, and you can see I have an arrow above the open and an arrow below. The ideal sell scenario, so if you were going into this week for AU and you were bearish, for some reason, you did your homework, you went through your macros, you went through your technical analysis, your fundamental analysis, and this week you said the weekly candle was going to most likely draw down. That means you're already telling yourself that you want to be selling above the opening price. You don't really necessarily want to be finding a sell below the opening price, because commercial speculators sell at the best price possible. They sell in a overbought condition, not an oversold condition. Ideal buy scenarios unfold below in a discount. Now, many people may sit here and ask, they see the chart going down. Am I going to look to sell every single day? Or am I looking to sell in a discount where it's oversold? That may not be the case. You could be finding small buy opportunities down here. Whether that's in London or New York, you can see there's some type of buy opportunity down here that you can see. We can see price takes out a previous daily low here, and there's some type of buying opportunity to run back up. Doesn't have to run all the way back up to the weekly opening price, but there is some type of ideal buy scenario that unfolds below the weekly opening price. Yes, it may not grant you the large run like this. That was that large daily candle that you see here. This candle here, see it's Tuesday. That's that you're seeing here. You may not get a large candle back up, but thinking about it methodically, where are you going to sell if you're looking to be a seller for the week? Above the open. It doesn't take a rocket scientist to see this idea. You got to keep the concept simple. And these are the true fundamentals to the market. Not a single indicator needs to be on your chart. People send me screenshots or they send me pictures of their, analysis. And I tell them, hey, you could remove the indicators because I know you don't need it. I know you don't. I know that the price action is all you need. You just got to get familiar with reading it. Price sells down in a premium from a premium all the way back down to a discount. Now, if we were to look at another pair, so let's say we looked at DXY, you see something completely different. Look at where they're buying and look at where they're selling for the week. Every time price rallied up or rallied down, where was it coming from? Either above the opening price of the weekly candle or below the opening price of the weekly candle. Every single sell opportunity that we saw this week, so DXY was mainly choppy, it was back and forth. You can see the open closes, the close closes close to the open. So this weekly candle was pretty tiny. It wasn't a large range in between the open to the close. You can see every time it sold, where was it? It was above the weekly open here. And when it ran back up, it was below the weekly open. Above, sell. Below, buy. Look how it taps into this and then gives a strong reaction back down. Many people are going to sit here and argue and tell me, and not sitting here trying to say I'm 100% right, but after hours of backtesting, years of seeing it over and over again, you realize that this is sound logic. Everything else that everyone's talking about is nonsense. The weekly opening price. If anybody tells you that the opening price for the week is not important, they are lying to you. I want you to know that. They don't know what they're talking about. And you could directly quote me on that. You could say, Deontay said you're lying. And we will disprove anything that they're saying about the weekly opening price. Price comes back up to here. Why here does price give a reaction here? Why does price not run all the way up here, then drop? Why does it happen to drop, hit this perfectly, and then turn around one more time, and then rally back up? Because this line is sensitive. That weekly opening price is a sensitive price point to the price action. It's either going to hit it, reject, or it's going to hit it and push right through. It's going to blow right through it. For example, look at Tuesday. See how Tuesday, you get large candles that run right through it? Wednesday, you see how it runs right through it? It cuts right through the line like butter. But here on Thursday, you get a different reaction. It hits it, and it runs away. And then finally on Friday, it shoots right through it. That's what the market likes to do over and over again. Week after week, day after day. Now, the ideology is broken down in so many fractals. This is only a weekly idea that I'm showing you here. The weekly opening price. The same thing can apply to the daily opening price. Midnight opening price. So 12 a.m., the opening price, 12 a.m., it's the same idea. Let's take a look at Monday. Now, many people say, oh, Deontay, we've heard this so many times. Yes, because it's crucial to your trading. It is very crucial to your trading. Midnight opening price is the same thing. So let's not forget that this dashed line here is the weekly opening price. So if we're looking at Monday, and we're going to 12 a.m. opening price, which is midnight opening price, which is here. And we're just going to make it black, and we're going to make it a dash. We'll make it red so it stands out. We'll make it red, and we'll make it a dash line too. That's 12 a.m. in New York. I live in New York. Many people ask where do I live. I live in New York, if you want to know. This is 12 a.m. New York Eastern Standard Time. That's the algorithm's true day range. That's when the algorithm or the CLS window starts programming, starts to settling payments and transactions, and the gears start turning. At this point, it has created the new daily overbought and oversold conditions. So the same thing that we're seeing here on the weekly is happening on the daily time frame. You have a premium overbought, and you have a discount. Anything below is oversold. Anything above is overbought. So we'll zoom in once again. Looking at this day, look at Monday, because everybody wants to use all these fancy terms. And when you break the market down into these large segments and these simple concepts, everything kind of just flows. It makes more sense this way. This is midnight opening price. We can see how price moves above it and sells off. That can't be random. And where is it doing it to? It's doing it during the London session. It made the high of the day at 3 a.m. This is the candle at 3 a.m. So if we were to highlight this, that's 3 a.m. London made the high of the day here, which is typically going to happen if it's bearish. If the day is going to most likely trade down, we would suspect London to make the high of the day. And it did do it here. And it trades down. But you see how it trades up above the opening price, 12 a.m., overbought. If it's overbought, the algorithm is most likely going to look to sell if it is targeting sell side liquidity. What happens here when it breaks this swing high? And what I'm going to show you is really crucial to what I'm going to show you about the New York session. The same thing happens over and over again. It's my favorite model. Price breaks a swing high formation, and we'll define what a swing high and swing low is, because some people are a little confused about how I find swing highs or swing lows, and we'll walk you through that process as well. This is a swing high formation in the blue. Make it red. I got to make sure everything's color coded. That's a swing high formation. It does it during the London session. I know going on the lower time frame, odds are I'm going to find some type of entry here to go short. It broke a swing high and gave a reaction down. Yes, it is hindsight. Anybody can sit here and say, oh, D, you're cherry picking. But there are ample examples of me doing this, showing it during the Asian session, the New York session, and the London session. London session breaks a 15-minute swing high. And this is for those that want to know, how can I utilize London to fit my work schedule or my life schedule? You know, oh, I'm a mom, I'm a dad, I have a job, you know, I work a 9 to 5, and I live on this part of the world. And at this point in time, you know, this is where I'm free. And other points of time, I'm not free. At this break here, scale down to the 1 minute. Find the break. That's where price comes up. That's that 15-minute swing high here. Price takes it out here during the London session. You can see how this is around 3 a.m. The early a.m. session. We have that BPR right here. So price makes a balanced price range, a fair value gap up and a fair value gap down. Here we can see it doesn't give you that entry back into the BPR. Here and here, that first fair value gap. But if I were to scale up, let's say we go here, 2 minute, you have a fair value gap here after the break on the 2 minute. Now, do I know if price traded into it or not? I don't know, because I'm doing this live with you. And we can see it does. You can see how this candle opens and tags right into this 2 minute fair value gap. Because many people ask me, oh, what do you prefer? Do you prefer the 1 minute, the 2 minute, the 3 minute? You pick whatever you like. Deontay would pick the 1 minute. So in this instance, if I was using the 1 minute fair value gap, I would have missed the entry. It's okay. I can live with that because I know there's going to be another time where I do get the entry. But here, if you were someone that uses the 2 minute fair value gap, you would have got the entry to go short here in London session. Tags into it. We'll press play. And this is after, you can see how it hits it perfectly, taps right into it, and it goes short. And where is this all occurring? In a overbought condition. That is a premium fair value gap. Price trades into it and it sells lower. It's happening when? During a session, London session. I'm not looking to trade in between the dead zones. And we'll talk about that when we talk about the New York session. But you can see how it's using this dead zone for this setup to go short. And that's how I would utilize the London session in simple terms, in finding a simple entry idea. Every day these things repeat. So you can see how down here, we have the New York session. Price comes all the way down here, makes the low of the week, and then it runs back up. Where are they buying this? They're buying this in a discount and oversold condition. After also doing what? Taking out the previous daily lows. We can see it takes out Tuesday's low, and it takes out Monday's low. The commercial speculators like to buy after breaking lows. That's it. If you was a commercial or a market maker, where would you most likely buy? Would you buy up here? Would you buy up here? No. You ask anybody if they would buy up here, it would make no sense. They would lose money because they're paying a higher cost. If you're a business owner and you wanted materials for your store, would you want to pay retail or would you want to pay wholesale? You want to pay wholesale. And where's the wholesale prices? The wholesale prices are below here. If I was a business owner and I wanted to build something, something for my store, or I needed a shipment of, some type of materials, I'm going to buy it at a cheaper price. And that's what the market makers are doing here. They're buying it at a cheaper price. And you see price comes all the way back up. But what does retail do in a discount? They most likely sell short heavily in a discount. Now, that doesn't mean that price action could not continue to go short the next day. That doesn't mean that you sit here and you say, oh, every day I'm going to look for a buy opportunity. It's just ideal. It's ideal. Doesn't mean it's going to happen. It's just ideal. I think a lot of people take it too literal. Like, oh, it's guaranteed going to give me a buy setup as soon as price comes below the weekly open. No, it is not. You need certain things to align. Here we can see what aligns. It happens in the New York session. So you get a New York session reversal, essentially. This New York session or London close, New York to London close session. The orange shaded area is London close. Price takes out the previous daily low on Tuesday and Monday. And then it goes up. It's not that it's randomly saying, oh, let's just head down here and then buy at some random spot. No. The market is not doing that. It is specifically going to certain points in the marketplace, then saying, okay, it's time to go and turn around. Takes out Tuesday's low here, and it takes out Monday's low here. then it goes back up, while also being in a discount or oversold condition. There's some type of buying opportunity there. And you'll see that as I go through the majors. So if we go down the line, we did AU. Look at GU. Completely different from AU. And we'll talk about SMT diversion as well. But we could see, I want to get this proper for you guys. Yeah. The low of the week comes in by Tuesday, which we normally speculate that. If we're going to be a buyer for the week, we know it's going to land on these 3 days. The low of the week is either going to form on Monday, Tuesday, or Wednesday. And we can see here, time and time again, it's Tuesday, makes the low of the week, and it rallies. Where is it coming from again? It's not like I'm making these things up, because I can't edit the candles on TradingView. It'd be impossible for me to do that. But where is it buying in an oversold condition? The low of the week. And when is it occurring? It's occurring during the London close setup too. London close. We know London close normally is going to give you what? The characteristics of a reversal or intraday reversal. And it starts the reversal because after this day on Tuesday during London close, it starts to trend back up. London close starts that reversal. Take this off. Where are they buying and where are they selling once again? It looks simple at first. When you look at this, it looks very simple. Where are they buying and where are they selling? It's above the open, sell. Buy below the open. That's it. It's always been like that. Now, it's not going to be picture perfect every week. Every week, everyone's going in, as soon as people think, as soon as it hits below, it's going to go back up. There are opportunities like that, yes. Have I capitalized on that before? Yes. As you trade the concepts time and time again, you'll be able to catch moves like this. You'll know, okay, I'm just going to buy here, stop loss 20 pips, and then run it back higher. You'll catch trades like that. Because, like I said, this price point is sensitive. It's the line in the sand. It is dividing the buyers and the sellers. The buyers are down here. The sellers are up here. I'm looking to be a buyer down here every time. I'm looking to be a seller up here every time. That's how I look at it. I'm not forcing the setup though. I'm waiting for particular things to occur. You can see here, Wednesday makes the high of the week. And ever since Wednesday, it breaks all the way back down. Friday makes the low of the week. Yeah, it does. Just want to double check. Yeah, Friday makes the low of the week here. And Friday, you can see here, you get a New York reversal. Price trades all the way back up into overbought. It's just going back and forth. Up, down, up, down, up, down, up, down. Notice how many times it touched the weekly opening price. One, or crossed it at least. Crossed one time, two, going down 3, and then going back up 4 times. But there's traders in the trading community telling other traders that the weekly opening price is not as important as midnight opening price, or vice versa. They're doing a disservice to people, and they're confusing people in the community. Because we clearly can see there's something about that weekly opening price that gears the algorithm to either sponsor the buys or sponsor the sells. I didn't do UCAD, but I did all the majors here. And we can see it over and over again. Ideal sell. It's happening here. Ideal buy. It's happening below. Now that's simply your weekly range. Now we're going to jump right into the New York setup. Because many people were asking for this. And I just want to get it. While I have your attention now and it's hot. People have short attention spans. Just want to get it out to you guys. This is gold. And we're looking at I want to look at the most recent setup here. I have a few examples. A lot of examples here. What I have highlighted here in the red and in the blue The red is going to be the London lunch session. So you got 5 a.m. to 7 a.m. That's essentially the dead zone. There's no trading permitted here. Then we have 7 a.m. to 10 a.m. New York Eastern Standard Time. That's like the live zone. That's where the algorithm is most likely going to sponsor or turn, or the CLS settlement windows are going to start moving and making the transactions. Had someone criticize me saying, oh, he said people. I meant entities in the market. We know it's not random people in the marketplace. I think fair enough, most people in the trading community know it's not it's not Deontay clicking buy and gold is going up. And it's not Deontay clicking sell and it's going down. But we know during this session overall, though, there are more people trading in this time period than this time period. Guaranteed. There's much more volume going on during 7 a.m. and 10 a.m. than there is 5 a.m. and 7 a.m. I know that's a fact. Same thing for London session. The London Open, 2 a.m. to 5 a.m. or if you started at 1 a.m., 1 a.m. to 5 a.m., I know most likely there's more trading volume there. And there's also more retail traders in the market at that point in time. Now, does that mean that they're the ones controlling price? No. I just know that there's more people trading at that moment in time. This is going to gear what this is going to have in store for New York session, for this model. It's the same thing that I showed with the Asian session model. For those that know, there's the dead zone. This is the dead zone. So I have 12 p.m. to 8 p.m. It's the same thing here that I'm showing here. 5 a.m. to 7 a.m. No trading permitted. So if we were to walk this through, and we're on the 15-minute time frame. I want to be exact with the time frame that I'm using. I'm using the 15-minute time frame. I'm using all the 15-minute swing highs and swing lows that are not broken. So when I look at this, and I look, bring it here. I'm marking this off. Mom's sneezing. Bless you, Mom. Swing low, swing high. There's a swing low here. 1, 2, 3. There's also a swing low. What's above this swing high? Buy side. That's buy side liquidity. What's below the swing low? It's sell side liquidity. So you go buy side. I'll use the dollar signs to be more specific. And then we got sell side here. I'm waiting for one side to be broken. Now, am I going in here using bias? No, I'm not using bias here. If you want to, you can. But I'm not using bias when using this simple model. I'll play it forward. We can see here. What happens here? Price takes out what? This swing low, 1, 2, 3. And we can see there's a reaction here. Let's see what's happening on the lower time frame. So let's go into 1 minute. So that's 7 a.m. That's the opening price. And you'll see how these ideas are fractal. That's the opening price for the London session. New York session. New York open, 7 a.m. The same thing is occurring here for the sessions as well. Anything above is a premium. Anything below is a discount. If you're looking to buy this market, where are you most likely going to buy? In a discount. It's clear as day. You see how price drops down below 7 a.m. opening price. Takes out what? That swing low on the 15-minute time frame. And I would normally wait to see some type of institutional flow to go long. Here I don't see any. So I don't see a 1 minute fair value gap here to go long. That's my favorite entry model. I wait for a break of a 15-minute swing high, swing low, go in the lower time frame, find a 1 minute fair value gap, go long, go short. That's all I'm doing. That's literally all I'm doing. Here, no opportunity. Play price forward. We can still see we have that 15-minute swing high here. See how price hits it? Let's see what happens after it hits it. and see what kind of reaction we get from the marketplace. We're currently in a premium for the session. We're above 7 a.m. opening price. What is that? That it formed once again. What is this, guys? What is that right there? It's a fair value gap, guys. Boom. What kind of fair value gap is it? It's a SIBI. So, I'll just fair value gap. Now, someone asked, what is a SIBI? Sell side imbalance, buy side inefficiency. The market fell very fast. So if you were to clear it like this, that's your gap in the price action. So if you were taking notes, SIBI, that's SIBI. Sell side imbalance. The imbalance is down. There's a sell side imbalance. There's an inefficiency of the algorithm covering the buy side. That's why it's called a SIBI. In simple terms, a fair value gap. We also can see there's a market shift occurring. Where's the market shift occurring, you may ask? Here. Takes out a swing low. And this is on the 1 minute time frame. Deontay is very acquainted with the 1 minute time frame. Always on the 1 minute time frame. That's why I'm trying to find lower risk entries. Now you see how it's coming together slowly and formulating. You're above in a premium, which is what? High probability sell scenario for the New York session. We just took out a 15-minute swing high. Step by step. I don't want you guys to reword me. First step, wait to see one side of liquidity broken. We see it broke sell side first. We don't get any entry to go long. Then it broke buy side. Then we see an entry point here. What would we do here at this point? We would go short right here. Now, what is this? This is an institutional entry drill right here. Wait for price to tap into the fair value gap and then go short. Where's your stop loss going to be? Above a swing high or intermediate swing high, or the candle that starts a fair value gap. So it could be this candle here. Stop loss above that, stop loss above this swing high here, this one here, or the higher one. One of these options could be your stop loss. Because if price is truly going to go short, it shouldn't want to run the buy side. If the algorithm is now seeking lower prices, why would it run buy side? Unless it's just going to do it for a false break. If it runs up, it does that, and then drops back down. You're going to have to live with that, guys. Which is why some people have a thicker stop loss. 15 pips, 10 pips. Sometimes having 2 pip SL, people try to flex that. Oh, I have a 2 pip SL. That doesn't mean much because it only takes 2 seconds for the market to say, oh, give me your stop, and then run you short. That's not a flex. I don't think that's anybody having a one pip SL isn't really showing anything. Just someone showing off. You want to see price hit this and go short. What do we see after price hits that? Price taps into it. What is also occurring here? It's a lot of ideas here going on. You're getting a lower swing high formation. It's the same thing I show when finding my daily bias. This is a swing high. This is a lower swing high. This is another lower swing high. The market is breaking down. It's making lower swing highs. Now, what is a swing high formation? Many people were confused. They're saying, oh, are you starting with the down close candle first or the up close candle? Doesn't matter what the color the candle is. A swing high or swing low. And for this example, a swing high is simply any high that has a lower high on the left and a lower high on the right. That's it. That's a swing high because the high on the left side is low. The high on the right side is low. That's your swing high. That's all a swing high is. It's not that I'm counting 1, 2, 3. I don't have to count the candles. I only showed the candle counting because it flows and it shows you, okay, it happens in 3 bars. We're on the 1 minute time frame, so it happens in 3 minutes. Same thing with the daily time frame. A swing high forms in 3 days. Since I'm on the 1 minute, it's happening in 3 minutes. It's the same thing. It happens in 3 minutes. A swing high here. Same thing here. It's a lower one. There's a lower one. But there's a shift occurring because we broke a swing low. And if we break a swing low, what is that in signs? Bearish momentum shift, breaking the swing low. So if we break a swing low, we should suspect a lower swing high to form. There it is. That's your lower swing high. You're looking to go short. And we can see it forms most likely inside the PD array. Right here. Forms inside the SIBI, and now it's looking to go short. Where's price leaving now? It's leaving the premium and now looking for a discount. We have that other 15-minute swing low that still hasn't been targeted. What does price do? See, price trades up, and then price is now going to find either some type of quote-unquote retail resistance, right? So it's going to hit some type of ceiling and then go lower. And we'll speed it up for the video's sake. And there it is. What is that? The other 15-minute swing low. Didn't take much for me to break down this trade idea. You could literally teach this to somebody that doesn't have any experience in Forex. You could teach this to your children. If you're someone that's a follower in the channel, in Telegram, YouTube, if you got children and you wanted to teach them how to trade, this would be the first model I would teach them. Because it's so straightforward. You can't mess this one up. You can't. If you go back on the 15-minute time frame, and this is the New York session, because people have been asking, how can I do it for the New York session, Deontay? Just showed you in 3 simple steps. Swing low, swing low, swing high. It all started with the break on the swing high, scale down to the 1-minute fair value gap, and you can see there goes the entry point here. Price goes short. That's all I'm waiting for. Let's take a look at another example. We use another day. Because, like I said, the model repeats itself. Not saying it's going to happen every single day, the same exact way every single time. But odds are it's going to repeat in some orderly fashion. Sometimes you're going to have back-to-back losing trades. Some days you're going to have back-to-back winning trades. The whole week the model can work. Or half of the week the model works. Or for the entire week it doesn't work. It happens. But with proper risk management, you'll be able to have the longevity to continue the trade. That's the whole point of risk management. You're trying to last as long as you can. You're not trying to burn out your funds or your equity. People are in here trading, risking 5% per trade. They're going to blow their account in 3 trades. 5 trades. While someone else is trading 1% per trade, they're able to trade 20 trades and be okay with a couple losses. They could lose 50% of their trades. But because they have proper risk management, guess what? They're not going to revenge trade. They're not going to get sweaty, clammy hands. They're not going to start tapping their foot. They're not going to start biting their nails, gritting their teeth. They're not going to start missing sleep because they're trying to make up for the lost profit. I've been there, guys. I've been there so many times. I've learned my lesson. I've been trading for what? 1, 2, 3, 4, 5, 6 years now. You would think that Deontay has learned his lesson for revenge trading, over leveraging. Yes, I have. I don't do those things anymore. That's poor habits. Cut that out. You're trying to be a full-time trader and you're still falling back on bad habits? What's going on? You got to take the game much more serious. What did we do here? Like I said, this is the lunch session, 5 a.m. to 7 a.m. No permitted trading here. We're not trying to trade here. We're going to wait for the New York session to trade. What are we going to find during this session? For those that are either joining or just following along again, or probably missed out, we're going to look for the 15-minute swing high. So we're going to find the 15-minute swing high. I'm going to see, and what is a 15-minute swing high? A swing high is just a high point that has a lower high on the left and a lower high on the right. And I want to see if this high is higher than this one. Nope. This one, who's higher? 2000, go back into 2000. That's impressive again, given what's going on in the world. So it's clearly this is the high. This candle's higher than all these candles here. So it's just prior to the session's about to open. So we're going to use it as a significant candle. We have this swing low all the way down here. What makes this a swing low? For those that don't know what a swing low is, it is the same thing inversely. This is a swing, the whole candle, right? The whole candle. It needs two buddies. And its buddy is on the left, and its buddy is on the right. The buddy on the left, the buddy on the right. Its low is higher. Its low is higher. That's what makes this candle defined as the 15-minute swing low. It's not that I'm waiting for two black candles or two green candles. It doesn't matter the color of the candle, guys. It just needs to be lower than the one on the left and lower than the one on the right. That's what makes a swing low, and vice versa for a swing high. Hopefully that clarifies what a swing low and a swing high is for those that have been asking. At this point, we have buy side and sell side liquidity. So we have this high up here, and we got this low down here. If price, going into the New York session, takes out this high, what can I look for on the lower time frame? Some opportunity to go short to where? To this low. If instead price opens, doesn't take out the high, runs close to it, looks like it's going to take it out, and then drops down, hits this, I may have an opportunity to go long instead. That's what could happen here. We'll play it forward. I'll do it step by step. Price here. Like I said, it doesn't have to close above it. Many people say, oh, it needs to close above it. No, it doesn't need to close above the high. It just needs to break the high. That's all it needs. It just needs to purge it. All it needs to do is tap into it a little bit. The same way when, you guys, and for those that live in America at least, football players, and I'm not talking about football like as in with the soccer ball, I'm talking about football, the American football. When they're about to cross the goal line, all they have to do is break the plane to get the point or get the touchdown. Their foot doesn't have to, their full body doesn't have to be in the end zone. The football just needs to cross the plane. That's what's happening here. The candle crosses the plane here. That's all it takes. It crosses the plane. I don't need a full body candle to come up and close above here. And then I'm like, okay, now I'm going to look to go short. No, I just need it to purge the plane. Breaks the plane. Now I scale down to 1 minute. Now that's where you wait. You play the waiting game. You scale down. And you're waiting for something to form. And I can already see it here too. There goes your fair value gap here. It's small. It's small. It's not something that's very apparent to the untrained eye. But there is a fair value gap here. Is there a market structure shift occurring here? No, there is not. Because we don't see a fair value gap running through a swing low, like the first example. But in theory, is this not still a fair value gap? Yes. It's the same thing here. That's a fair value gap. What can you look to do here? Go short. Wait for price to tap into it. Go short. Let's see what happens. Let's speed it up. You can see it taps it. Look how quick. I mean, of course, I'm speeding it up. But look how dynamic and quick that reaction is off of that. Just to get down to this 15-minute swing low. Not one time did I mention to you COT data. Nope. Not one time did I mention to you net long or net short positions of gold. Not one time. Nope. I just use price action to figure out this scenario here. And if I can, you can too. I know each and one of you guys, all my supporters, all my followers, are definitely smart enough to find these setups. Guaranteed. Disclaimer, because I know nobody come and sue me. Profits do vary. Whew. And you can see just gotta live with that sometimes. Just before it hits that 15-minute swing low, something occurs. I don't know what happens here. Could have been news. I'm not gonna try and look to see what happens. Price shoots up. Might have run. Look how it cleans out all these highs here. Engineers the highs. One more time, it gets back above the high. One more time. And then it goes short. These are things you're going to have to live with in Forex, in trading. You're not going to win it all. But you can see the theory that's unfolding here. going from buy side to sell side. Look how quick they run these highs, these clean highs. The algorithm is literally engineering clean highs. Here, 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 here. Gives the fair value gap. You go short. And this is gold too. So hopefully someone leaves this video tonight with a model and they are very successful with it. I'm not saying gold is the pair to use for this model. Back test it. I would say back test it for the next 3 months. Back test it for half a year. See what pairs you like to use with it. See what pairs formulate or give you this ideal setup more often than others. Because not every single pair is going to be optimized for a certain model. Certain pairs move better for certain models. If you've been backtesting long enough for any model, you realize some pairs move much more dynamic, quicker, and react in a certain precision with a certain model. All the pairs have a different characteristic. Up, down. But let's take it a step further. One more time. Where is 7 a.m. opening price? I'm telling you, this thing is so fractal. And people overlook it. But nobody on YouTube wants to talk about it. Nobody wants to talk about it. They want to talk to you about all these other things that don't make any sense. That don't make sense. I watch all these. I'm not trying to knock anybody, though. But some people are not spitting real game to me. I watch their YouTube videos and I click off of it because I know it's nonsense. I know it's nonsense. I don't watch anybody else. Don't watch nobody on YouTube. Sad to say. New York opening price. It's 7 a.m. Once again, where does price go for the sell opportunity? Above the opening price. It goes above the opening price, guys. I don't know how many times I can show this. I'm going to show this to the day I die. To the day I finally say I'm going to retire from trading. It moves above the opening price. Multiple times. Let's count how many times it does it. 1, 2, 3. Then it finally drops. 4. Then it dumps. Then it dumps. 4 times it went above the opening price. For what? Sponsorship to sell in a premium. It's not random, guys. Not at all. So check the chat real quick. Cool. If anybody has any questions, let me know. It's not random. But every single time, people are going to tell me, oh, the opening price doesn't make any sense. How does it not make any sense? And I'm showing it to you right now. You can do this yourself. It's not like Deontay is coming here and using Chat GGP and editing the candles or using some editing software. I can't do that, guys. I'm not that smart. I can't do that. This is TradingView. This is my account. This is Forensic Forex. I can't do that. But you can see again, the ideology is following suit here. And this is a lower time frame example. This is a session example. Midnight opening price. Sunday's opening price. Sunday's opening price is the weekly opening price. The monthly opening price. The daily opening price. The yearly opening price. It's the same thing, guys. Just on different time frames and different perspectives. And look how dynamic that sell opportunity was. Gold sells. And we'll just play it out to 10 a.m. and see what happens. Literally continues to sell throughout the rest of the New York session. All off of that one idea. And you're telling me you can't find setups, guys. You can't find setups? We'll find it together. And I'll keep showing this. I'll keep showing this. Because this is crucial. As much as everybody wants to sit here and say, oh, can you teach me IPTA? Can you teach me COT data? Why? Why would I ever want to show you something that you can hardly comprehend? Or is a bit confusing at first when learning it? When I just showed you a winning model. That was 2 days too. It was 2 days. I just showed that on. That this was the first day that checked out. Another day checked out. We're about to do a third day. And we're going to see another example. I'm going to go through this one a little faster, though. I'm not just going to sit here and just ramble on. Once again, coming here. This is Wednesday going into... Why is it like that? Shouldn't be like that. Move this down, move this down. Why is there no trading permitted here? Because we know the London lunch, its characteristics, because many people don't know that the sessions or certain time periods have different characteristics. If you study it, and if you know ICT's material, each session has a certain characteristic. Now, for the dead zones, it's normally two things that I know happens in these dead zones. The zones that is like the lunch, like the New York lunch or the London lunch, normally you're going to get a deep retracement or you're going to get consolidation. So far, the last two examples, and this is the third one, you've seen only consolidation in these red highlighted areas. What a coincidence. Yeah, what a coincidence that 5 a.m. to 7 a.m., you're only seeing consolidation. I'm not saying every day, but some days you're going to get a deep retracement. And ICT has spoke about that. He said some traders get a nice setup in London, but then during 5 a.m. to 7 a.m., there's a deep retracement that knocks them out. And then price continues going in the intended direction. And those are things you got to live with. Once again, we come here, we find our 15-minute swing highs. That's one. And our 15-minute swing low. We only have two here. It's a small session. It's only 3 hours. 5, 6, 7. It's only a small amount of time. So you're not going to have a bunch of swing highs and swing lows. Here. And here. Same principle is following. So if you have your notepad out, or you have, if you're recording it yourself or whatever you're doing, pay attention. I'm going over it a third time. What's above this high? Buy side liquidity. Now we know the market likes liquidity because it's money over there. There's orders. Now, what do we mean by orders? We mean that at some point in time, somebody decided to sell. Now, this is just if you're intellectual and you think about this critically, in an analogy, somebody happened to think that this was a turning point to go short. There's most likely going to be what? Maybe someone's stop loss above here. Someone was selling to go short on gold, and they have a stop loss above the high up here. Same thing here. Somebody went long here, and they most likely have what? A stop loss below the lows, somewhere below here. I don't know if it's 5 pips, 10 pips, 30 pips, whatever it is. There's probably a stop loss below that low, or just underneath it, or exactly on the low, or exactly on the high. That means we know the market is going to either run there, run it out, and then liquidate that person. Let's see what happens. Get back to this. When price runs that 15-minute swing high and 15-minute swing low. Play it forward. You see that right there. Boom. You get a nice spike up. Have we ran the swing low yet? No. We've only ran the buy side. So we're on alert at this point. So the way I do it with the Asian session, I go in and I click this. And I literally put an alert in replay function. I put an alert in and I type in 15-minute swing high broken. And when it breaks, I get an alert to my phone. And when I check my phone, it says 15-minute swing high broken. I instantly tell myself, oh, Deontay, you have an opportunity to probably go short here. That's what I do every single time for the Asian session at 8 p.m. I set my alerts. That's that 15-minute swing high here on the 1 minute that was broken. This red line here. I don't know why the indicator is pushing the session. Oh, actually, that is correct. I have this marked wrong. That's why. Silly me. Have it marked wrong. There we go. That's that 15-minute swing high here. That's broken. What happens here on the lower time frame? Let's see. Do we find any fair value gap that we could potentially go short into? Let's see. We don't have anything yet, so we have to wait. Patience. Be patient. There we go. We have one right there. You see it? Right there. And it also creates a shift in the marketplace. Why does this create a shift, you may ask? Because it sweeps a swing low. Swing low broken by fair value gap. Yeah, you're not going to see it properly like that. We'll just leave it like this around here. Swing low broken by a fair value gap. So it would be ideal, most likely, to find a short here. Where's price doing this? Where's price forming the fair value gap? Physically, where is price forming the fair value gap? Above 7 a.m. opening price. Premium. That's 7 a.m. Price does it above 7 a.m. opening price in a overbought condition, the fair value gap. What would I do as a trader? I would wait for price to trade into it and then go short. And what would I aim for as a target? Swing lows. Does it have to be the 15-minute swing low that I marked out? No, it doesn't have to be. It could be the short-term swing lows here, 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 or here. It could be other swing lows that are not broken. This one is a swing low. That's a swing low. That's a swing low. Doesn't have to be the 15-minute one. Because I could get in here with a 10 lot, 5 lot, or a standard. Let's say I got in here with a standard lot. 10 pips, 5 pips. I could take that and run with it. Let's see if price taps into the fair value gap. And it does. Wow. Once again, price tapping into the fair value gap. You're telling me that there's no way that people are not finding these setups. What does it also do? It creates a lower swing high formation after breaking a swing low. Swing low broken, that puts me on alert for what? I want you to pay attention to the same idea that I'm showing you here, because we're going to talk about it next on the daily time frame. Exactly what I'm showing you here on the 1 minute happens on the daily time frame, and this is how I find my daily trend. This is how people are like, whoa, how did you know AU was going to go up? How did you know AU was going to go down? How did you know GU was going to go up? How did you know gold was going to go down? Because of this idea. Swing highs, swing lows. That's all the market is made out of. But everybody else on YouTube is going to tell you everything else, but not get straight to the point and tell you how to find trend. Why is that? I could sit here and make a 2-minute video and showing you how to find the trend. That's it. Swing low broken. I need to find, if a swing low is broken, I need to see a lower swing high form. So when this swing low was broken here, let's say here. When this swing low was broken, right there, that's the swing low that's broken. I want to see a lower swing high form because that's going to be signs that the algorithm is gearing for lower prices. The market makers are setting in for their shorts. So I need to find a swing high formation that's high. That's a swing high here. 1, 2, 3. What makes this a swing high? Once again, to clarify, there's a lower high on the left and a lower high on the right. Did Deontay count candles to find this? No, he did not. I just know that's the swing high because it's higher than the one on the left and it's higher than the one on the right. That's what makes that the swing high. Same thing here. There's a higher one up here. So we clearly have structure going lower and lower. That's the highest one. That's the lower one. I'm trying to catch the next lower one. I'm trying to catch the short-term rally. If I had to say it in simple terms, I'm trying to catch this short-term rally to go short one more time. That's what I'm doing. And I know it's most likely going to form inside the PD array. It's forming inside that fair value gap that forms here. I'm not saying it's going to form perfectly inside the highlighted box, because everybody wants things to be so perfect. It's not perfect, guys. There are some days where it's crystal clear and it hits it right on the pip. Hits the fair value gap on the exact premium, the discount low. Hits it and then it goes short. Sometimes it overshoots it, but it doesn't take out that swing high. Then it goes lower, which is why you have a stop loss. You play it forward. Now I'm expecting the lower swing high to form. So I'm already, now at this point, Deontay has his phone out. I'm on my MT4, or whether if I'm on a web platform or from my laptop too. Deontay's sitting here waiting for the entry, patiently, waiting to pull the trigger on the short. If I have time, I will set up a limit order. Right? I'll set up a limit order or a stop order, whatever it is. And then if I don't have time, it's a manual entry. Do I care specifically where I get the manual entry? No, I don't. I just know it has to be within this range. And then I set my stop loss and my risk. I'm already risking 1% or 2% if I can. Price taps it. 1, 2, 3. 1, 2, 3. The third candle, if you miss this opportunity here, what can you do? You can wait for this third candle to get broken, then go short. These are just little tips I've learned watching the market year after year, week after week. Wait for the third candle in that formation, 1, 2, 3. That's the only reason I count it, to teach people which candle is the one I'm looking at. The last candle in the swing high formation. If this candle's low is broken, I'm going to look for a high probability raid on the next candle that breaks this that low. May not happen perfectly, but you can see how price, once again, looks to be making a shift again with a swing, breaking a swing low or clean lows. And this low is lower. Once again, that's a swing low formation. Yes. See the low. Who's lower? This is 470, 465. So this one's lower. The black candle is lower. So that means this low is higher and this low is higher. That's the swing low here. What is it doing again? Another fair value gap. Another opportunity. We'll get rid of the third candle. But you can see how this third candle in that swing high, 1, 2, 3, that's the pullback that I'm looking to go short in. Waiting for the retracement. I'm waiting for that short-term rally. Because what is retail thinking here at this point? They're thinking that this short-term rally is going to make them go higher. That's not always the case here. Which is why retail loses most of their profits. They're not using it strategically. I'm waiting for this break here, then I'm finding this. And there's steps to it. 1, 2, 3. 1, 2, 3. It's normally a 3-step process. It's nothing more than 6 steps. It's 3 steps for this model. Yes, you may have a retracement or a hard pullback, but odds are, if it's going to go short, like I said, you can see it's breaking down. If it's going to go short, it's not going to want to run these swing highs, guys. And if it does, odds are, it may just be a false break to convince retail to go long again. So if price were to break this swing high up here, like price were to came up here, might have been a false break, and then it breaks down. Some people lose their cool about that. I'm sorry to tell you, but if you're going to lose your cool over that, I think this isn't the career for you. I think you should do something else. If you're going to lose your cool about that, think about looking into another career, because that happens very often. You can see here, the structure is literally breaking down. And we'll get rid of I want to get rid of all this. It looks like mess. To me, already the chart is too messy. That's why I don't like indicators in itself. It makes the chart very unclear to see this. That's a lower swing high. That's a lower swing high. 1, 2, 3, 4. Those are 4 swing high formations, all going lower. Isn't that not telling you the market's going short? And look what it hits. It hits that 15-minute swing low. Did Deontay at any time said, what is the daily chart doing? What is the higher time frame doing? No, I didn't do that not one time for this model. I didn't go onto the CFCT website to show you the COT data, the net longs and net shorts for gold. I didn't do that once again. So hopefully that is very insightful to you. I showed 3 examples. So now you guys know what the New York session model is. Does this happen every day? Possibly. Possibly. I'm not guaranteeing that. Because I know people, oh, you said that in your video that it happens every single time. Sometimes it does. Sometimes every day out of the week, let's say you're trading 5 days out of the week, right? You're going Monday, Tuesday, Wednesday, Thursday, Friday. Sometimes it forms every single day. Gives you 10 pips, gives you 5 maybe, gives you 15. Sometimes it gives you 100. It just happens. And then some days you're going to have losing setups back to back. Don't let that discourage you. You want to you want to roll with the punches. You get punched, you get back up. But you know it's okay because you risk properly. It's the fact that you're risking too much, and that's why you're beating yourself up. That's the main cause of it. You're already risking too much. If you literally click buy and sell, and instantly your brain goes, "Oh, snap. I think you probably risked too much." Because when I click buy and sell, there's not a moment in time where I'm like, oh, I'm in trouble here. No, because I know I'm okay. If it runs my stop loss, I'm going to go to sleep like a baby. And I'm going to wake up tomorrow, try the model again, mitigate my losses, and move forward. Other people are not doing that. They're doing what? They're taking the trade. They're like, oh, dang, I'm trying to hit a home run and be a millionaire in one night. And then they blow the account. This is why they're not full-time traders, guys. This is why they sell scams. This is why they sell signals. This is why they scam people. Signal providers and all that other nonsense that they have in the trading community. It's just people leeching off other people. Charging people mentorship. Come to my mentorship for $100 a month. Imagine me charging $100 a month for this information. Insane. Some people would say, yo, D, you should be charging for this. But for what? For what? I want everybody to eat. I'm not going to gatekeep this. I want everybody to win. Not everybody's going to comprehend this. Some people have a learning curve. It might take some people longer. And the way I'm explaining it may sound easy at first. I've been doing this for a while, guys. Some people, it's their first year trading or their first time even looking into ICT concepts. And that's it. That's literally your New York session model. And the quickest way to backtest it, and I'll show you guys the indicator too. If you want the quickest way, the way I speed up my studying, I just take the indicator. So what I did is, because people want to know what the indicator is called. It's called FXN Asian Session Range. It's my favorite one. It just highlights the candle and hugs the candle better. And it's by Rob Binty. So if I were to click it like this, right there. It's that one there. Rob Binty. The settings for this, because everyone's going to ask what the settings is. I take off one session because it highlights 3 sessions, so I take one off. It doesn't matter which one I do. I take off the labels, I take off the lines and stuff like that. I go to inputs, and I go down and I change 1 to 5 a.m. to 7 a.m. And then I keep the New York session on, which is 7 a.m. to 10 a.m. That's all I'm doing. And that's simply it. And that's how I'm able to I can skim through this on the 15-minute time frame, and I can easily see, just looking at the chart, you can see where the New York session is giving setups, guys. You can see here. Look at how it runs, just looking at this chart quickly. Look how it runs the low here, turns around. There was some type of fair value gap here. I don't even have to go in the lower time frame to know that there was possibly some type of lower time frame here, fair value gap that got the long here, taking out the low of the dead zone or sweeping a swing low. And we can see it's doing what? It's moving below 7 a.m. opening price, going into a discount, rallying. Wow. Forex couldn't have been any more simpler coming from Deontay's mouth. Same thing here. You zoom in. What happens here? Those are that 15-minute swing highs here. Price comes up, hits it, goes short. Wow. Here, look, this is great. This is I can tell this is a losing opportunity. Price takes out a swing low, and what happens, instead of it running higher back to the 15-minute swing highs, right up here, what happens? It drops. So I'm glad to show a loser, because everybody thinks the model is just golden. You would have lost one there. And that's simply how I backtest. That's how I effectively backtest and be efficient in backtesting. I put on the sessions indicator. I look for the days that look like this, like that give a buy side to sell side to buy side, and then I study that and I see what happens in a lower time frame. That's how I figured this out very quick. Now, many people would say, "Oh, it's similar to the ICT silver bullet model." It is. It literally is the same thing. It's just for a certain session. Did I know at the time what the ICT silver bullet model was? No, I didn't. I didn't really know what it was. I was influenced by the 20 pip per day model when he was talking about the Asian session high being broken, or short-term high being broken. Go short, go for a 1-to-1. If you watch the video, he literally tells you risk 40 pips to gain 40 pips, or 20 pips to gain 20 pips, and just hold. But then I did further studying and investigation. I was like, nah, there's got to be a better way to get a better entry to take less risk. I don't want a 40 pip SL. I wanted a smaller risk. 15 pip SL, 20 pip, 40 pip was a little hefty. I didn't like that. And I studied it and I was like, oh wow. Asian session has a model that repeats. And then I looked at the New York session and I was like, oh, the same thing happens here too. With no bias. Look at this. Look at how price takes sell side here and runs straight up to the buy side of the red box. And as you can see, all the red highlighted zones most likely is consolidation. Look at all the red highlighted areas. Most likely consolidation. Like you see this some days, like I said, some days you're gonna get trending. Market just trended all the way down. And if I see something like this, ideally the setup most likely probably won't happen in New York. It won't give you. Most likely the consolidation is where it starts with. All markets start in what? A consolidation. Then it starts to breathe. That's what's occurring here. Look at the consolidation here. This is probably a great example too. It's the last example. I just want to look into it myself too. We'll do it together. It's like we're back testing together. So price has the Asian session here. Asian session. The New York. Can't even speak, Deontay. You have the London lunch session here. It takes out what? That 15-minute swing low right here with that large candle down. Right here. Let's see what happens around that area. There, it breaks it. And look, notice how on the break too. What a trade, man. You would have made so much profit on this gold trade. Notice how when it breaks this low here, there's not a single fair value gap that forms either. Up. Because it's going to the opposite. So you're looking for a busy, basically. A buy side imbalance, sell side inefficiency. Do you see any fair value gap after the break of this? No. So we're just waiting at this point. So let's say we're walking through it live. And we're like, oh, our phone gets the alert. We broke it. Now at this point, we're sitting in front of the screen. This is why I don't like to be a slave to the chart. I don't have to sit here and watch the chart for the whole session. That was one of my biggest goals in 2022. I didn't want to be a slave to the chart. I hated staying up and watching the chart. The worst thing ever. And I would just wait for a fair value gap. You can see here we have a breaker, a short-term breaker. So there's other PD arrays you can use. Get the breaker. Price sweeps a low, then runs up, trades back into the breaker. Do we have any fair value gap? We do. We had one. So it doesn't take the first one, but you can see here, fair value gap here. There goes the fair value gap. Now, if you watch the ICT Silver Bullet model, or whatever clips you've watched of other people talk about it, you'll hear in an audio clip, or you hear in the video, he says, take any effing fair value gap. I'm not going to curse on my channel, but he said, take any effing fair value gap and go long and put 5 handles on it, and I guarantee you'll quit your job. That's what he said in the video, word for word. If you watch the, I'll share it in the channel after. He said that. Take any fair value gap. It may have not been this one, but it was this one. You go long, and then what happens? Price continues to keep going up. And you can see all those short-term dips. All those short-term dips are retail thinking it's going to sell. That's when you hear all those people come to, like, I'm not saying specifically, but some people will probably send me a picture. Oh, I think gold's going to go short. It goes down and then it runs them. And then they're quiet for the rest of the day. They don't want to talk to me. Because they might be a little embarrassed. And it's okay, because I don't get things right. Some days I lose lots of money. It's okay. And that's essentially the New York session model. So hopefully that was insightful. Just want to check the chat real quick. Daily, cool. I'm going to go for the top. Real good. We should only target a that breaks a high or a low to enter off for the Asian session model. A fair value, got that. Breaks a higher. No, you don't have. I say it's ideal if you get the market structure shift. So if the fair value gap breaks a swing high or the fair value gap breaks a swing low, it most likely is ideal. Doesn't mean if you get that fair value gap and it doesn't break that swing high or swing low, like I showed in the third example, it didn't give you the shift. I think the third or the second example, it didn't give the shift. The fair value gap still held its place for the setup. Greetings, Brandon. Mark out the set. I went. I think you guys saw that too. Yeah. FXN Asian session range. Facts, Rob Minty. Nice. You guys are so nice to each other. Why is the daily opening at 12 a.m. and not 5 p.m.? That's a great question, Jeremiah. 5 p.m. New York Eastern Standard Time, depending on. So I know for gold it's 6 p.m. It's an hour ahead. The daily candle starts. So let's say today is Thursday. I know today's Friday, but let's say today is Thursday, and it's currently now 5 p.m. Or let's say for gold, for the example for gold, it's 6 p.m. and it's Thursday. You're gonna see the Friday candle form. It's already open and live, and it's still Thursday. Now, why does that happen? Because that's how the market is geared. It's not 12 a.m. The algorithm or the CLS settlement period or the clearinghouse period, that's the true day. So that's what ICT is referring to. That's why ICT tells traders to use 12 a.m., the opening price for 12 a.m. How can we find the daily futures contract for COT? Oh, no problem. So if you're gonna come here, right? You're gonna come here. This is the website here. This is literally the website. This is the specific link to get there, because if you come to the website, you're gonna have to click a few things, but this link specifically will take you straight to where it is, and you would come here. You would click this, come into traders. You scroll down, and you will find. Sorry, you click short format, because some people, Chicago Mercantile Exchange. Click the short format. Doesn't matter which. If you want to look at the long format, because what's the difference? That's the long format. I'm not looking at that. I'm snappy with my time, trying to make money. Short format, so it's really broken down. Here you go. You got everything you wanted. Butter, milk. You can see it here. Non-commercials, which is what? Large speculators and small speculators. You can see the longs and shorts there. Commercials, mainly really paying attention to the commercials. And you're most likely going to see the commercials, their longs and shorts look completely opposite to what the non-commercials are doing. Non-fat, dry milk, you're going to see live cattle, lumber, feeder cattle, cheese, Canadian. Now we got the future contracts. Canadian dollar, Swiss franc, Mexican peso, British pound. The list goes on. Euro. Then you have the currencies too. You have the euro versus British pound. I'm not looking at the currencies, honestly. I'm looking at all the futures, honestly. Euro FX, Japanese yen. You see longs versus shorts. If you even go lower too, because some people don't know this. You got Bitcoin right here. People don't know that there's Bitcoin too. You got the Bitcoin right here. Longs versus shorts. You even have the micro Bitcoin, and then you also have the S&P minis too. And more people don't know this too as well. You have the minis, E-minis of certain things. S&P mini right here. S&P mini 500 right here. Longs, shorts, commercials, and last update. I think they update it every Tuesday, if I'm correct. If you go on the website, but do your due diligence though. You go on the website, you'll see everything here. You have all the minis, and that's how you find the COT data there. Chat. Does it work with indices? I would expect so. You'd have to back test that, my friend. I believe we've interrelated into SOP and MOP idea for our fib range is better in turn of the higher tariff range. Yeah. I believe that we've interrelate in it to SOP and midnight opening price for our fib range to better. Well, it all depends on what you like to do. I don't know. You never see me send a 4-hour chart. I'll be honest with you. I hardly use a 4-hour chart. It all depends on what you like to use personally. There's not one time I probably sent a 4-hour chart in the channel. Normally when I send pictures, it's the daily chart, weekly, the monthly. Every time I go into a new month, I send a monthly chart Or if I'm looking at like Asian sessions, I'm using 15-minute, 1 minute, sometimes 2, 3 minutes. Hardly these everything that you see up here is mainly what I use. You don't see the 4 hour up here for a reason, because I don't use it. Same thing here. If there's a currency pair that's here and it's highlighted, that means I possibly look at it. In these stocks too, even stocks, I look at stocks as well. You got to be multi-asset here, multiple streams of money. I use the futures contracts, the bonds, the yen crosses, the majors. That's mainly what I think people should be trading. People trade some funky pairs, and I think it's just not proper. But all in all, that's what I would use for that. Now for IPTA. So since we're coming to the end of the month, I want to just slowly show you how the market structure follows that higher swing high, higher swing low thing. And UJ was a prime example of that. And I figured UJ was going to continue going higher. Now, if you're watching this live, obviously you can't go back, but hopefully you have good memory of what I was showing you with the lower swing highs when price broke the 15-minute swing high and then started making lower swing highs to go short. The same thing is here found on the daily time frame. So I don't want to clear this because this is very important for me. But we could see here, price, delete this, price does what here? And we'll rewind it together. F it. No, we'll clear it. Anything for you guys. So we're going into April. Right here. Right, this is April. Right here. That's the opening price too. You're going to see all this is going to slowly start to blend together. And you're going to be like, wow, the market is really fractal, guys. That's April's opening price. It's the same thing that I was showing you guys with the New York opening price, the weekly opening price, midnight opening price. This is the monthly. Let me just leave it as April. Opening price. Anything above it, it's a premium. Anything below it is a discount. Here and here. And this idea repeats every single month. But nobody wants to talk about it on YouTube. And there's probably a few heads out there that do talk about it. Let me not say there isn't. But there's a few people out there that are probably doing great service to the trading community and exposing other traders to this. This is the opening price. It's up close. That's the opening price for April. Using April 3rd, the first official trading day. The Monday, right there. I'm not using the Sunday. I'm using Monday. I'm doing the daily time frame. Anything below is a discount. Anything below is a premium. We can see price dips below into a discount and potentially could run higher. So price goes to this swing high because we all saw that it goes to this swing high. What happens when price takes out that swing high? So play it forward. So price breaks it. That puts me on what? High alert for higher price action. I need to see and suspect a higher swing low needs to form. My little brother's calling me. Give me 1 second, guys. I apologize. I apologize, guys. My brother just got out of work. Swing high broken. What am I going to suspect now? A higher swing low to form. Now, we could see this is a swing low. Right here. That's a swing low formation. And this is the daily time frame. This is how you find trend, guys. This is how you find the trend. Swing high broken. I'm waiting for a higher swing low to form. There it is. Right there. There it is. That's the higher swing low forming. Why is this the higher swing low? People go, Deontay, why is this higher swing low? Oh, I'll tell you simply. It's the higher swing low because it's one, clearly a 3-bar pattern. It only takes 3 days since we're on the daily time frame. It's a daily swing low. And we have a higher low on the left and a higher low on the right. This candle is the swing low. It's not that it's not that 1, 2, and 3 is the swing low. No. When people hear that, sometimes I think it confuses them. They think that all 3 of these candles is the swing low. Without this candle and without this candle in the middle cannot be the swing low. It needs these 2 buddies on the side. It needs its homies. It needs its best friends on the left, best friend on the right, and then you get that swing low. That's what's going on there. It's higher than this one. This one's the lower, and that's the higher one. So the fact that this broke this swing high and we got a higher swing low, there's possibly a bullish momentum shift occurring on the daily time frame. That is very significant because you're tracking the trend. What can we suspect moving forward? Higher prices or price action moving higher. This is the 3rd candle. This is the high probability scalp model as well that I'm showing here right now. I have a video on it on YouTube. If this 3rd candle is broken, it doesn't have to be the next daily candle, because people ask me this question all the time. They ask me, oh, what happens if it doesn't happen the next day? It's okay if it doesn't happen the next day. So let's say candle does this, doesn't break it. The next day, doesn't break it. As long as it doesn't break the actual 3rd candle's low or the actual swing low, I'm okay with that. I normally don't want to see it break the 3rd candle's low in that swing low formation. But once price breaks this candle, so let's say it's 2 days forward, this is the candle that breaks the high. That means this candle's high is going to be the high probability scalp model, or the high probability raid on buy side on the previous daily high. So let's see what happens. So we'll play it forward. Boom. This candle, so the next day breaks it. That means this candle's high. I would suspect some point in time tomorrow. I don't know when, because I'm not going to go down a lower time frame, but I don't know when. Whether it's the London session, the New York session, or the Asian session, at one point in time, I know that price is going to give me an opportunity to get a high probability raid. Let me get a target sign for you guys. Where are you at? There you go. There's going to be a high probability raid on this high here. Odds are that's what's going to happen here. Play it forward, and you can see that at one point in time we were able to get a raid on this previous daily high. Price opened here, and at one point in time it runs up and takes out that high. That's all I need. That could be 10 pips, that could be 20 pips, that could be 30 pips, but I know that this high point, whatever this coordinates is, price is going to make a run on this number here, and it does, and a little beyond it too. That's how I'm able to see that. Now at this point, if the market is trending up, and I'm thinking critically about this, if the market makers want this to go higher, down close days should be respected or be made as order block theory. It should either trade down into a down close candle and respect it and move higher if the market is truly bullish. Sometimes it would give 3 days down and then it shoots up. But overall, I would suspect it to go higher if it's in an uptrend. We also have a fair value gap here. I'm not going to break it down on every little thing because people will sit here and try and pick me apart and say, oh, what about this? What about that? I can't show everything. I can only show the things that I can crucially show you in a timely manner. What happens the next day after a down close day? I say this very often. You can normally expect dynamic buying after a down close day in a bullish trend. What happens the next day? Green candle. It's the same thing if you were investing into stocks. If you're looking to buy or lower your cost average on Apple or Alibaba or Microsoft or Alphabet, whatever, or Amazon, whatever stock it is, you normally wait for a down day to buy because it brings your cost value down on your share price. So let's say instead of buying Apple at $200 a share, you wait for Apple to drop down to $150 and then you buy. And then you see it, and then it brings down your cost average. My alarm went off. 9:30. Cool. That's what's happening here. It's a counter trend candle. What are they doing here? Retail thinks it's probably going to drop here. It's not selling. They're buying in the down close candle. Everybody thinks that they're selling in this down close candle. Absolutely not. They are. They're selling and buying. but they're primarily buying. These down close candles, everybody thinks it's heavy shorts. No, it's not heavy shorts. They're buying at the same time. They're hedging the market. They're buying in these down moves. Buying. 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 They're buying even heavier in these down moves. But retail sees the black candles or the red candles, whatever color you have it set for. They see it as, oh, bearish momentum. There's no such thing as bearish momentum. There's not. Down close. Down close. Look at the down close. And look what happens after these down close candles. Most likely dynamic buying. And as this is where we currently are in price. And I was expecting UJ to higher prices. And this one candle is larger than probably the last couple weeks candles. It's the largest candle that we have in the last couple weeks. Or last couple months, honestly. Largest candle. And there we go. We have Larry Williams' concept of small range to large range. Once the candles start getting smaller and smaller and smaller, you have a preconceived notion that you're going to most likely catch a large candle. And there it is, a large dynamic candle after all these candles start getting smaller and smaller and smaller. And when does this large up close candle form? Most likely after giving down close candles. Down close, green, green. Price goes higher. And you can see the market makers want this to go higher. Now, many people will sit here and say, oh, but what about this, Deontay? At this point here, I saw price run a swing low. It did. What is that? Just a sell side raid. They're running sell side. They're running sell stops and then running price back up. Like I said, you're not always going to get it right. Some people see this as a turtle soup. They're going to catch that. You may not see that as a turtle soup set up long. You may be seeing this as, oh, market structure shift, okay, or bearish momentum possibly. But what do you need to see after breaking a swing low? You need to see a lower swing high. There's no confirmation of a lower swing high, so why are you looking to go short? Doesn't make sense. You can see price does not give a confirmation of a lower swing high like this after taking out this swing low. 1, 2, 3, right? Price breaks it. Is there a lower swing high that forms after breaking that? No, we don't. You see price immediately turns around. So we know that was just a false break. And they run price back up high. Quick. Some people were not reluctant to catch this. And some people would sit here and cry about it. What are you crying about? There's 365 days. You're telling me one day is going to upset your whole trading career? Come on, guys. Not one day. Not 1 week. Not 1 month. You have 6 months. 6 months. 6 months. I wish. You got 12 months. Let me delete this. I want to show you guys the same idea. It's a monthly time frame. Some people don't have the courage to wait for this though. What starts this uptrend? It's so simple. When you look at it in a higher time frame, it makes you realize that the market is like very simple. What gets UJ to this point here? It clearly has to do something down here. So let's take a look at what's happening down here. Let's bring it back to, let's say here. What gets UJ to that uptrend? What starts it? The break of a swing high, most likely. Or a false break. A break under a swing low and then running back and taking out a swing high. What is this here? Let's say we're looking at it from this perspective. That's a swing high that's been broken on the monthly chart. That's potentially a bullish momentum shift coming into play. What do we have to wait for now? A higher swing low. So that's the lower swing low. All we have to do now, speed this up. No, that's way too slow. Is wait for a higher swing low to form. Boop, there it is. So quick. That's your higher swing low, guys. At this point, UJ continued the trend higher after making this higher swing low. This is a monthly chart idea that I'm showing you guys. Now, I know some people may say, oh, that'll take forever. Who's going to hold a setup for that long? There are traders out there doing that. That this is their model. They trade on the higher time frame, and they're okay with waiting this long. They're the snail. They're not the rabbit or the hare. It's a marathon. And I guarantee you that this setup was way more rewarding than any setup than I've ever possibly taken if they were to catch that. And ever since then, what happens now? That swing low is protected because they don't want to run this because they sponsored the buy position here in that formation. They sponsored the buys. And you'll see as well, it's all fractal, guys. After getting into this bullish trend, look at every down close candle in this bullish trend. What happens the next day? Well, I didn't say next day, but it's the monthly chart. What happens the next month? You get a down month, what happens next? Up. You get a down month, what happens the next month? Up. Indecisive. Nothing here. See, and then people will read into this. Oh, doji. Doji what, guys? What? Candlestick patterns. Nonsense. That's nonsense, guys. I read a book about candlestick patterns, Deontay. The market makers don't care about the market makers literally don't care. It's that funny to me when I think about it. The market makers don't care about candlestick patterns. They don't care. They don't care. People say, "Oh, Deontay, what about this doji? What about the doji? Is that concerning to you for? What about this little doji indecisive candle? I don't care about it. It doesn't mean anything to me. Not one time has anybody hear me talk about candlestick patterns. You would never hear me talk about candlestick patterns. Waste of time. And even it's an up close candle. Look at the down close. What happens the next month? Up. And look how small the body is and look how large it is. So many fractal ideas, guys. I can go on and on. Doesn't matter what I show. I can show this on Apple. Let's go on Apple. Let's forget Forex for once. Let's forget foreign exchange for once. It's the same thing, guys. Same thing. Let's take off all this stuff though. Take this off, this off, this off. Take this off. We need all that stuff. It's the same thing that's occurring. Look at Apple chart and show me every single down close candle on Apple's chart and see what happens the next month. Tell me there's not buying after a down month. You can't tell me there isn't because there's so many examples on this chart right now. So you're telling me you couldn't invest in Apple when there was a down month and get a rate of return on your money buying on a down month? You absolutely could have. Let's take a look back in 2019 when Apple was literally almost 40 cents a share. What happens the next month? You get a rate of return, green. One down month. Look at this, ride back up. Yeah, you get it down. Yeah, it hurts. It sucks to see your money go away, your profit go away. But if you're investing into stocks, you're in this for the long term. You think this company, Apple, is going to exist in the next 50 years? Then you invest your money into it. Now, I'm not a financial advisor, but anyone with brain cells or common sense would know that Apple is going to be here for a long time. Now, this is not financial advice. I would concur you to advise whoever manages your money or your funds. Advise with them. But this is Deontay, Forensic Forex. If I had to tell anybody on the street how to invest in the most simplest way, wait for down days. Wait for down weeks. Wait for down months. Wait for down years. And buy. And hold. That's all you're doing. When it comes to at least stocks. The same thing vice versa for foreign currency. Down month, buy. Down month, buy. Down month, buy. Down, buy. Down, buy. Down, COVID and stuff. No, the Fed's printing money. Quantitative easing. I don't have to get into all that stuff. Down month, buy. Down month. Look at how stocks are coming back again. Apple's about to do what? Break an all-time high again. And guess what people are going to do? They're going to miss out on it once again. Yep. Everyone's gonna say, "Oh, the crash is gonna come." Okay, let the crash come, guys. Let the crash come. You think people care if it crashes? They want it to crash, so they can buy it cheap again. Who doesn't want to buy Apple? Who wants to buy Apple at almost $200 a share? Nobody wants to buy. I mean, yeah, there are people out there that have the money to do it, but nobody really truly wants to buy Apple at $200 a share. They want to buy Apple back down here. They don't care if the stock market crashes. They're just gonna buy it again, guys. Doesn't matter. Doesn't matter. Let's just check the chat. Please, can you make us some minutes to explain how you define a strong trending pair and a lagging one, as you did in order to choose the pair to focus on the month? Okay, cool. No problem, Brandon. Simply what I'm showing you here. So when it comes to the monthly chart, I'm using the Larry Williams model. Small range, large range. So I know if I get a small monthly candle, let's just go back to a pair. Let's just look at gold, for example, since we were looking at gold for a while. Let's just say hypothetically, today is the last day of October. And I was looking through a basket of pairs. Odds are, if I'm going to pick a pair, it's most likely going to be a pair that is going to have a small monthly candle. Now, why am I picking a pair with a small monthly candle? Because I know potentially next month may be large. Now, we could see for October here, it's a small candle. The body. Don't look at the wicks, because everybody's like, "Oh, what about the wicks?" I don't care about the wicks. And where I've learned it from, and not sitting here trying to give all praise to Larry Williams, because hey, he's got his flowers. Hey, he's a good trader. Whatever the case may be, he has a record high. Whatever the case may be, right? He said, look at the bodies for only, because that's where the true volume resides in the candle. The true bulk of the meaning of this candle is in the body, not the wick. Yes, there may be other cases where you use the wick, but here we're looking at the body. Next month, I'm expecting the candle to be larger. That's why I'm picking gold. And we can see the next month, what happens next month? Look how large that candle is, guys. It's so easy to pick it. Last month, I happened to not get a good one. So, for example, I picked AU. Right? Last month. I picked AU and UCAD. Because when I post a poll, I said, what pairs do you guys want me to see me trade? And I mainly made a decision. I narrowed it down to AU and UCAD. Now, why did I pick AU and UCAD? Because last month was small. And I was expecting a large candle. And we didn't get it. That's what happened here. Now, let's just look at UCAD. I want to see what UCAD did. Got a small candle, too. So I wasn't able to get that flip of the coin of the large range candle on the monthly chart. But you'll see there are often times where the previous candle was small, the next month is large. That's what I was looking to catch. And I'm glad to show you that I didn't catch it. To show you that I'm not perfect. To show you that I'm not the GOAT or whatever. I'm the best trader in the... No, I'm not. Because there are going to be times where I'm not going to get it right. And there's going to be times where I'm stuck in accumulation, consolidation, or seek and destroy. Now, normally, I would expect a seek and destroy or consolidative month after we get a large candle. So if we get a large monthly candle, odds are I would see price probably bounce around. So like this here, see how large this candle is? Next month, I probably wouldn't really favor it because I'm not expecting price to give me another large candle. It's most likely going to hop into another cycle. And it's two natural cycles that the market work in, large and small. Or vice versa, small to large. If you get a large range monthly candle, odds are next month you may not get another large candle like that. We haven't, in recent time, have we had UCAD give another large candle like this? No, we haven't. But we can see it's building up. Potentially, sooner or later, it's going to give a candle larger than this one. I know that. Do I know what month it's going to be? Do I know it's going to be in August? Or is it going to be next month in May? It could be, because it's small. It's going to close small. So next month could be a large dynamic candle, and I'm expecting dollar to come back strong, if anybody was wondering. I'm expecting dollar, the DXY, to gain strength again and be large and probably run to the upside because we have a fair value gap here for UCAD. You can see prices are respecting it. Created a higher swing low formation here. 1, 2, 3. Did break the third candle's low, but it still didn't really break. Did it break the low? No, it didn't. So we still have that swing low here. But that's how I'm picking which pairs that I would prefer to trade. So if I get a large range candle, odds are I don't want to trade the next month because I know I might be stuck in some type of seek and destroy of consolidation. Now, that's not every single time. That's just my simple filter to pick pairs. That's it. See how this candle is large for January 2019 or 2019 in general? Right, this monthly candle. Look how next month it's small. You literally don't even go anywhere for UCAD. Like, this would be a headache. You see price go all the way up and then come back down. That would confuse a lot of traders. But simply, if my filter told me don't trade after a large monthly candle, I would not be trading UCAD. UCAD would not be one of the pairs I'm looking to trade. That's how I'm picking my pairs. So when I post the poll tonight, you're going to see the pairs because I need to make a new poll for May and what pairs you guys want to see me track. But it's not like I'm allowing people to pick the pairs because I want to pick pairs that are dynamic and are ready to move. Normally, when it's small, it's like a spring. It's consolidating. It's accumulating orders for the monthly chart. It's building buy-side and sell-side sentiment. And then eventually, one side is going to spill over. The cup is going to spill over into buy-side, or the cup is going to spill into sell-side. And that's what I'm anticipating every single month. Hopefully, that answers your question. Andrew, what's up, man? How's it going? I'm aware that there is a higher chance that the high or low of the week forms Sunday through Wednesday, but there is a condition that will depict when the high or low of the week will form. But, is there a condition where, yes and no. You would have to do your homework. And the reason I say that is, let's go back to the weekly range. Good question. It's a great question. Shout out to Andrew for this question. Like we said, we know that it's and yes, sometimes it's Sunday too. I'm glad that you included that, these 4 days. But ideally, I like to see it here and really here. So you can see here, Wednesday makes the high and then sells off. Normally, what you're going to suspect is you're using the higher time frame premise and you're using some type of PD array for price to play off of going into the next weekly candle or the next weekly range. So something here previous to this week triggered price to trade up here on Wednesday to go short. It had to be some type of PD array on the higher time frame that told EU that it was going to go short on Wednesday. Or on Tuesday, there had to be some type of PD array. At one point in time, this was the low of the week. Had it been something it traded into for it to go higher. So that's normally the criteria. That's a little more complicated for most people to get, catching the high or the low of the week. I know a lot of people want to catch the high or the low of the week, but it's not necessary. That's the thing. It's not necessary to go hunting for the high or low of the week. You're going to drive yourself crazy trying to catch the high or the low of the week. Because you're going to sit here and try and say, Tuesday's going to be the high of the week, and then you go short. And it doesn't work out. And then it ends up going longer instead. Or Wednesday is supposed to be the high of the week, but instead it lands on Thursday. Then Thursday goes short. You want to just take a portion out of the pie. I'm just trying to take a piece out of this candle. That's all I'm trying to do. Every single day. Monday, Tuesday, Wednesday, Thursday, Friday. Whether it's 10 pips here. 50 pips on this day. Whether it's, 100 pips. Let's say it's 100 pips on this day. Wow. Amazing. You know what I mean? Whether it's 10 pips. Again. Whether it's negative 100 pips on this day. I'm just trying to take a portion out of the weekly range. I'm not trying to catch the whole thing. Yes, there are times and days where I catch the whole thing. Or there are times, you guys can attest to yourself, there are times and days where you guys catch a trade and you're able to hold it for weeks. And you're like, whoa, look at the pips I made. Look at the profit I made. Yes. And some people are very consistent in catching that. Most people aren't. But the criteria is there's some type of higher time frame premise for you to say that Tuesday is going to make the high of the week, trade in. You have to do your homework and say, oh, is there a fair value gap? That price, I'm going to see when is it going to trade up into it? Does it happen on Tuesday or Wednesday? Okay, it does it on Tuesday. But when does it happen? Is it happening during the New York session, the London session, or Asian session? Okay, those are my high probability time periods where I can find a trade set up. And if you think it's going to go short in the bearish order block, the SIBI, the mitigation block, the bearish breaker, whatever it is, you take that shot. You may not be right. And you may be totally right too. And then you catch big and you win big. That's how I would look at it. That's the criteria every week. Hopefully that answers your question, my man. Can we? Yes, you can. Rock. Shout out to Rock. Good question. Can we use it for indices as well? 930? Yes. All I would say is backtest it. Don't take my word for it. Go into the market, do your due diligence, and study it. I could sit here and say, yes, it works. And then you go in and then you're like, oh, it doesn't work. Do your due diligence. For example, guys saw yesterday, it's the same model. This is the UJ one. The UJ one was really nice the other day. The sell setup that I was trying to show you guys. I showed the buy setup and I showed the sell setup. If you're in the channel, you know exactly what I'm talking about. And I showed the profit and everything. From here to here. So every day I'm doing this. Mainly Tuesdays and Thursdays. Because people ask me this question as well. Are you using the Asian session model every single day? Not necessarily. If it's there, I may take it. If it's not there, then I leave it alone. I mainly focus on Tuesdays and Thursdays. Now, why did Deontay pick Tuesdays and Thursdays? Because the data that I've collected, studying it for a couple months, I've realized that Tuesdays and Thursdays tend to give me more than 20 pips. That doesn't mean Monday and Wednesday and Friday does not give me more than 20 pips. I've just noticed consistently that something about Tuesdays and Thursdays, the Asian session model for the yen cross pairs, tend to give me more than 20 pips. Sometimes to give me 100 pips. This is what I'm doing. This is the dead zone. This is 12 to 8 p.m. I mark off all the 15-minute swing highs or 15-minute swing lows or the lowest low or the highest high I have in the session. Then I go into the session thinking, okay, what side is going to break? I don't know. I just wait and I set an alert for this high and this low, especially if it's trading in a range. Once that high is gone or the alert is hit, I take my phone out because I don't like sitting here staring at the screen. I'm not trying to damage my eyes. Press play and I watch price out. Boom, price breaks a 15-minute swing high. I would either scale down on the lower time frame to see if there's a 1-minute fair value gap that I can go short in. I know there wasn't one. But instead, I was showing a buy setup. So I showed a buy setup. So the buy setup here, I'll show it here. Because it's the same thing. It's all fractal, guys. Doesn't change. Doesn't change. Same idea. It's all fractal. So when I was looking at the marketplace and sent the screenshot in the trade, this is what I saw happen. Price breaks this. That's what? A market structure shift because there's a fair value gap. There's speed breaking this swing high. Opportunity to go long here. Stop loss either below the swing low or the fair value gap that starts low. So that's what I had here. I think I had a 10 or 15 pip SL. I have to reference my chart and my history on my MT4. Price trades down into the fair value gap. Let's just show that right here. That's the fair value gap there. What would I aim for? So since I'm using the Asian session as a mode of finding buy side and sell side, I mean the New York dead zone for buy side and sell side, you can see here, these are all the 15-minute unbroken swing highs. There's even one here that I forgot to mark in the screenshot, but I left it alone. They're all relatively equal highs. And I wait for price to trade down into the fair value gap, and I go long. And I hold. Let's speed it up. And I hold. And you can see here, runs one 15-minute swing high. Runs another 15-minute swing high. Runs that one. Runs every single 15-minute swing high during the dead zone. Every single one. Runs every single one. And you could see, as soon as he gets up here, we get a obvious fair value gap that breaks structure once again. The same thing that is occurring down here with the structure shift here, with that fair value gap. Yes, it comes below the fair value gap. It's not going to be perfect, guys. It's not going to be perfect. Everybody would love for the perfect screenshot to send their friends and their homies. Oh, look at this sick trade I got. It's not about that, guys. It's about paying your bills and making money. Fair value gap here. There goes the shift. A swing low being broken by a fair value gap. Go short. That's where I had sent the screenshot. At that time, I was buying. I took the profit, and I sent another screenshot. I was like, I'm looking at a sell setup. And literally, the news dropped. 2 seconds, Deontay was able to make that quick sell-off. And it was quick. It was very quick. It happened in the snap of a finger. Literally, like two minutes later, it happened. 2 minutes. I'm exaggerating. A couple minutes later. Boom. One large candle down. Large. And where does it hit? It's like it's just picking random spots. People will tell me, oh, the market's random. It just picked that low randomly. It just randomly picked that 15-minute swing low that we marked off on the dead zone to run back into. It's not even on it properly. There we go. Price happened to magically just pick this low. No, it didn't. Did that on purpose, guys. It did that on purpose. It ran to this low on purpose. Now, yes, some people may say, try and justify, oh, what about this here? It's trying to fill in this void here, this inefficiency here a little more. That could be another theory as well. It's not just one-sided, because Forex is multidimensional. There are many ways to look at it, or many ways to speculate it. But for me here, I was speculating price to probably target this swing low here, and that's where you were able to see me catch that sell set up here. And there was multiple fair value gaps on the way down. And breakers too. Price comes up, comes down, runs right into that. And we also all have another fair value gap here too. Here to here. Price does it there. Yes, almost 3 opportunities to go short here after taking out all these 15-minute swing highs. Just to target back down to that 15-minute swing low. And then after that, price continued shooting high. I was like, oh, I think UJ is going to continue trending higher. And it definitely did, which is why we got that large daily candle for UJ to the upside. But that's what I'm doing every day for the Asian session. It's not no complex anything, honestly. And I don't use COT data as much as people think. I don't. I really don't use it as much, to be honest. This information here, I hardly use it. Yeah, it may give you an edge, I guess, quote unquote, but it's lagging. It's a whole week late. I want you guys to know that this is a whole week late. Like if I were to show you guys data at CFT, where is it at? Commitment to traders. Normally it tells you. I know I read it somewhere. It's a whole week late. Every Tuesday. Oh, there it is. There it is. It's from the previous week. COT reports is from Tuesday and released Friday. The CFCT received the data from the reporting firms on Wednesday morning and then corrects and verifies the data for the release by Friday afternoon. And even then, they're late sometimes on the data. It's another lagging indication. I don't depend on this. Yes, it may give you a little edge. And yes, you can also look at, some people ask too, can you look at gold and stuff like that? Yeah. If the metals here, see that? Metals, others. I click short format. Just easier to see on the eye. Silver, as well. And there you go. You got gold. And then what do you have? The managed money here is clearly the commercials here. You got the longs, and you got the shorts. And you also have the open interest as well. And you have all the other things too. Copper, right here. Cobalt, aluminum, another type of aluminum, another one steel. So that's basically where I get that information from. If I'll leave it in the bio or send it in the channel for people to. I'll send this exact link straight to the Telegram channel. Yeah. Is there any other questions that people have? No problem, Rock. My pleasure, my man. Anything. I want to make sure I got everybody. I answered that. 5 p.m. dead zone. It's a dead zone. You're literally trading. You're trading inside the New York dead zone, which is what I'm showing you here for the Asian session here. So just to reiterate what that is. See here? All this entices. This is all the way up to 8 p.m. So 5 p.m. is right here. Boom. That's literally where the new daily candle starts. People don't realize it. The new daily candle starts. Even though it's still Wednesday, right here, Thursday's daily candle is already formed and printing. The market has already birthed the new daily candle. Even though it's still Wednesday, you could see Thursday's daily candle. I want you to check your chart next week. Wait till Monday, 5 p.m., and then you'll see Tuesday's daily candles forming. And people ask me, is there any significance around it? No, there's not. I'll be honest with you. There's no significance around it. It is still the opening price for the daily candle. So if you want to use it as the opening price instead of 12 a.m., you can. You can backtest it. Have I backtested it? No, I have not. I've been using 12 a.m. opening price. But if you use 5 p.m. opening price, you'll see it drops below it, and then it rallies. You can see it here at least. You chart from here. This is the opening price. You can see here. That's essentially the daily candle here onto the next 5 p.m. opening price. You can see it drops below 5 p.m., quote unquote, the daily opening price, the official daily opening price, drops below it, and then it runs higher. But if there's any other questions that I can answer, please shout them out. I am not afraid to help anybody. I'm here to help. That's all I want to do. I just want to help everybody. And I want to get my sleep too. But yeah. But all in all, yeah, this is another successful Forex Fridays. Hopefully this was insightful. Hopefully you learned something. Hopefully I cemented something that might have been a little confusing for you at first, or something that you may have not understood. If you still don't understand something, I'm a couple texts away. I'm not someone that I won't text back. I will text you back. If I don't get back to you, it just means I'm just not available. But I will get back to you. I try to respond to every single message, comment, email. Some people email me. DM on Telegram, IG too. I don't use Twitter. I don't like social media. It's too many social media platforms. Everyone's like, oh, you need a Twitter, you need a Discord, you need a Facebook, you need an IG. I don't need that stuff, because that's not what life is about. It's nonsense. I just want to trade, make sure I'm good, make sure my family's good, make sure my girl's good. That's it, bro. That's all I'm worried about, bro. So, yeah, that's it, man. I'm really... 2 new messages. Yeah, New York Eastern Standard Time. Weekly opening price. Weekly opening price is... Yeah, like you said, Andrew said, Sunday, 5 p.m. But if it's gold or DXY, it's 6 p.m. So I'll show it one more time. So this is the weekly breakdown. You can see here, that's the opening price. So if I zoom in, look at the bottom of the chart. Oops. If you look at the bottom of the chart, look at where there's the black highlighted area, the tab. You can see this is Sunday. Look at when I move my mouse from this point on. If I move my mouse to the left, you're gonna see it says Friday. Friday. You see that? Friday, Sunday. That's the opening price right there. Boop, boop, right there. Even if I go on the lower time frame to show it, if I literally go to the 1 minute time frame, some people have troubles finding it. They're like, oh, what time frame should I use? Doesn't really matter what time frame you use. Sheesh. There it is. See? That's Sunday. This is also proving to people that you can see Sunday's data. Some people say you can't see the Sunday candle. Technically, there's no Sunday daily candle because it's mixed in with Monday's daily candle. That's why. There's no Sunday's daily candle because it's mixed into Monday's daily candle. But here, that's Sunday's opening price here. See how it's Friday at the bottom of the screen? Friday, boom, Sunday. Right there. If I could get it on the point. Let me zoom in. I'm off by a couple. It's EU. It's supposed to be 17. It's supposed to be 17 here, but it's not showing it here on the 1 minute. It's going 17.03. But that's how you would find the opening price for Sunday's opening price. And you use that out. If you can't have Sunday's opening price, you can just opt for Monday's opening price. That's it. That's the only difference. But since you have TradingView, you should be able to see Sunday's opening price. There's no excuse to find Sunday's opening price. And I use Oanda because people will type in Euro, USD, and you can see all these different ones here. Binance, OTC, who's that? Kraken, Capital One. I'm only using Oanda. I know if some people type in gold. Let's see. It comes up. No. DXY. DXY is going to be TCV. There's certain pairs where it's like FX. Yeah, this. I see. It's most commonly I see most people using this FXCM. And then people wonder, oh, I didn't see the fair value gap like you on your chart, Deontay. Yeah, you didn't because you're using a whole different broker. That's why I'm using Oanda, and also Forex.com is also good as well. I used to have a live account with them, and then I switched over to Oanda for my live account, and then funded account with FTMO. But Oanda is pretty solid if you were looking to get into a live account. But all in all, that's all I have for tonight, guys. Hopefully this was very insightful. Like I said, I'm literally a DM away. DM away. If you want to send me a chart, if you want to email me anything, you want to talk about stocks too, like, I'm all game. Hopefully this was insightful. I really appreciate every single one of you guys. Thanks for all the support. Thanks for the nice comments. Thanks for your questions. Thanks for everything. Honestly, I really appreciate it. Thank you guys. So, love for New York. Appreciate it, guys. Thank you so much. Enjoy the weekend, guys. You made it through another week. We're going to get back to work on Monday. So I'll see you guys soon. Peace. No problem.
Recordings.